Hi everyone, it's Paul Brown here from Wealth21. Hope you're all keeping well. I put together a market update being recorded on the 2nd of May 2022. So firstly, importantly, any information in this video is just general information only. It doesn't cover your specific circumstances. If you have any questions relating to your circumstances, please give us a call or contact an authorised financial advisor. Let's first have a look at the Australian share market. This is a 5-year chart, and in the last update back in January, we spoke about the 10% fall that we saw in early January, just based on inflation fears and so on. So the Australian share market has actually recovered a little bit of ground since that fall, and even though it's not at its peak that it reached in August 2021 yet, it's still showing quite a bit of resilience. Different story with international shares, however. This is a broad index of the global share markets, and that index reached its peak in around December 2021, and it fell actually 15% over 44 trading days, and it's still down a fair way. So we've seen the Australian share market being relatively more resilient with everything happening in the world compared to the global markets. So what is influencing the market? Well, firstly, inflation and the likelihood of higher interest rates. The US inflation rate is higher, and the Fed has already started raising rates in the US. The Australian inflation is now, last week we had a figure above 5%, first time that it's been at that level for a while. And the RBA is expected to raise rates potentially starting tomorrow, actually. The other thing we'll look at is the rapid increase in bond rates that we've seen over recent months. The horrible situation in the Ukraine is obviously influencing global markets as well, particularly in Europe. And we're also still experiencing supply chain disruptions, partly due to the Ukraine, but also there's COVID lockdowns in China that are also impacting global supply chains. So let's look at US inflation. The US inflation rate's now at 8.5% after being, around 5.5% through the middle of 2021. It's been steadily rising now to 8.5%. Australian inflation did jump up in the middle of 2021 as we started to come out of COVID lockdowns to 3.8%, and now it's 5.1% as of last week. So the other factor I mentioned was the very rapid increase that we've seen in bond rates, and this is a 5-year chart of the 10-year bond, the Australian 10-year bond rate, which is often referred to as the risk-free rate of return. It's basically the return you would get on an Australian government bond over a 10-year period if you bought one today. Okay, so back at the start of January, that rate was 1.5%. But as of today, it's actually jumped up to 3.25%. So that's a very steep increase over a short period of time in the 10-year bond rate. So we have a converse effect though. When bond rates rise very sharply, you'll find that the price of the bond also falls. So this is just a composite Australian bond fund composite ETF, and it shows that in January the price of bonds generally have fallen pretty sharply over a short period of time for what is typically known as a defensive asset. So what it's meant is the start of 2022, our defensive assets have not been defensive because of that very rapid rise in bond rates. Of course, the other factor to consider though is that bonds weren't very attractive at the low rates, but now with the rates rising, they're more attractive now compared to dividends on Australian shares, for example. So the final chart that I have is from Dr. Shane Oliver, which is an economic activity tracker. It sort of looks at things like job ads, restaurant bookings, confidence, retail traffic, and so on. And Australia comparatively looks pretty good on this chart. We're continuing to see economic activity, which is good. Europe, in the dark blue line, is also showing to be quite resilient given everything that's happening in Europe, and the United States very modest on that chart. So there we have an update. If you have any questions, please feel free to give me a call or send me an email, and I appreciate you listening. Thank you.